Hey everyone, welcome back to the channel. You know I'm all about that hustle, building wealth, and making smart financial decisions. And there's no better way to keep more of your hard-earned money than by minimizing your tax burden. Most people think taxes are this big, scary, unavoidable expense, but the truth is, there are tons of deductions and credits out there that most Americans completely miss out on. So, stick around because in this video, I'm revealing the top 10 secret tax deductions that most people overlook. By the end of this video, you'll be a tax-savvy pro, ready to tackle your return and keep more of your hard-earned cash. Alright, let's kick things off with a big one, especially for all my fellow entrepreneurs and side hustlers out there. The home office deduction. To qualify, you need a dedicated space in your home that's used exclusively and regularly for business. It can't be a dual-purpose area, like your kitchen table that you also use for eating. Once you qualify, you can deduct a portion of your rent or mortgage interest, property taxes, utilities, and even depreciation based on the square footage of your home office. Think about it. If your home office takes up 10% of your living space, you could potentially deduct 10% of those eligible expenses. That can add up to some serious savings, especially if you've got a significant portion of your home dedicated to your hustle. But remember, keep accurate records and make sure you meet all the IRS requirements to avoid any issues down the line. Now let's talk about medical expenses. We all know healthcare costs can be a huge burden, but what most people don't realize is that you can actually deduct certain medical expenses on your taxes. To qualify, your total medical expenses need to exceed a certain percentage of your adjusted gross income or AGI. For most people, that threshold is 7.5% of your AGI for the year. Many expenses qualify that you might not even think about, like doctor's visits, prescription drugs, acupuncture, chiropractic care, even travel expenses related to medical treatment. You can even deduct the cost of those little blue parking stickers you get at the hospital. Keep all your receipts, meticulously document everything, and see if you can reach that 7.5% threshold. You might be surprised by how quickly those medical expenses add up and how much you can save. Next up, we've got a big one for all my students and graduates out there. Student loan interest. Look, we all know student loan debt can be a huge burden, but did you know you can actually deduct a portion of the interest you pay on your federal student loans? You can deduct up to $2,500 in interest payments each year. And the best part is, you don't even need to itemize to claim this deduction. It's an above-the-line deduction, meaning you can take it even if you're using the standard deduction. Now, there are some income limitations to be aware of. If your modified adjusted gross income is above a certain threshold, the deduction starts to phase out. So when you're gathering your tax documents, don't forget about those student loan interest statements. Chapter 4. Giving back pays off. Charitable contributions. If you're someone who regularly donates to charity, you could be missing out on some serious tax benefits. The IRS allows you to deduct charitable contributions, but there are some rules and limitations. First, you need to make sure you're donating to a qualified organization. We're talking about registered 501c3 non-profit organizations, not your neighbor's GoFundMe. You can deduct contributions of cash, clothing, household items, even stocks, and the deduction limit is pretty generous. You can generally deduct up to 60% of your adjusted gross income for cash donations, and up to 50% for donations of property. Keep all your receipts, get documentation from the organizations you donate to, and see if you can maximize this deduction. Chapter 5. Sales tax versus income tax. Which one benefits you? When it comes to deducting state and local taxes, you have a choice. You can deduct either your state and local income taxes or your state and local sales taxes, but not both. For most people who live in high-income tax states like California or New York, deducting state and local income taxes will likely result in a larger deduction. But if you live in a state with no income tax or a very low income tax like Texas or Florida, then deducting sales tax might make more sense. The IRS even has a handy calculator on their website that can help you determine which option will give you the biggest bang for your buck. So, don't just automatically assume one is better than the other. Take a few minutes to crunch the numbers and see which deduction works best for your specific situation. Chapter 6. Owning a home. Maximize your mortgage interest deduction. The mortgage interest deduction is one of the biggest tax breaks available to homeowners, but recent changes to the tax code have made it a little less generous. In the past, you could deduct the interest on up to $1 million in mortgage debt, but now, that limit has been reduced to $750,000 for mortgages taken out after December 15, 2017. However, even with the lower limit, this deduction can still save you a significant amount of money, especially in those early years of your mortgage when your interest payments are highest. So, make sure you keep that document handy when you're filing your taxes. Chapter 7. Retirement contributions. Invest in your future, save on taxes today. Saving for retirement is crucial, and the government wants to incentivize you to do it, which is why they offer some sweet tax breaks for contributing to retirement accounts. There are two main types of retirement accounts, traditional and Roth. With traditional IRAs and 401ks, your contributions are tax deductible in the year you make them. This means you can lower your taxable income now and potentially reduce your tax bill. The catch is, you'll pay taxes on the money when you withdraw it in retirement. On the other hand, Roth IRAs and Roth 401ks don't give you a tax deduction up front. You contribute after-tax dollars. But here's the kicker. Your money grows tax-free, and you won't owe any taxes when you withdraw it in retirement. Contributing to a retirement account is a smart financial move that can save you money on your taxes. Okay, this next deduction is for anyone who's currently on the hunt for a new job. Job hunting can be expensive. Between travel expenses, application fees, and resume printing costs, it can feel like you're spending money just to try and earn money. But here's the good news. You can actually deduct certain job hunting expenses on your taxes. To qualify, the expenses need to be related to looking for a new job within your current occupation. You can deduct things like travel expenses for job interviews, including mileage, airfare and lodging, resume printing and mailing costs, job placement agency fees, and even the cost of career counseling. Just remember to keep all your receipts and make sure you meet all the IRS requirements. Alright. Let's talk about investing in yourself, specifically through education. The IRS offers a few different tax breaks for people who are pursuing higher education or continuing education. One of the most valuable deductions is the Lifetime Learning Credit. This credit can help pay for undergraduate, graduate, and even professional degree courses. You can claim up to $2,000 in credit each year, and the best part is, it doesn't have to be used for a degree program. You can use it for individual courses to acquire job skills or improve your existing skills. There's also the American Opportunity Tax Credit, which is specifically for students in their first 4 years of higher education. So, if you're currently in school or planning to go back to school, make sure you explore these education-related deductions. And finally, let's wrap things up with a big one for all my fellow entrepreneurs and self-employed viewers out there, business expenses. One of the biggest advantages of being self-employed is the ability to deduct a wide range of business expenses. We're talking about everything from your home office, remember that one from earlier, to your office supplies, travel expenses, marketing costs, even your health insurance premiums. The key is to keep accurate records of all your expenses throughout the year. The more organized you are, the easier it will be to claim all the deductions you're entitled to. There you have it, folks. Those are the top 10 secret tax deductions that most Americans miss. Remember, taxes are a complex topic, and the information I've shared in this video is for general knowledge purposes only. It's always best to consult with a qualified tax professional to get personalized advice for your specific situation. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more tips on saving money and managing your finances. See you in the next video.